Good morning, traders. Steve Gans here, walking you through another start to finish trade. So this is a trade that's worked out pretty cool. It is a trade that I personally made and I shared in the channel here back in December of last year. And I'm going to put the link down below so everyone can see that. And I urge you to go back and play the thought process I was going through at the time that I opened this trade. Again, it was back in late December. So just to give you a brief overview of that, this is a trade that someone had taught me. It's called the Breakout for free. I wouldn't really call it a breakout for free because there is some risk involved in it for sure. But again, I urge you to go back and take a look at that prior video to see all about that. The important parts, the quick summary of this is back when I entered this in December, we're going to go to a chart here. Back in December, FedEx had a huge sell-off as a result of an earnings report. And so I watched FedEx kind of chop around here a little bit, and I made a decision that I don't think FedEx is going to go a lot lower, or at least probably not below this 230-ish range. That was my opinion. Again, at the time, I was just seeing something like this. The rest of the market hadn't played out. But again, that was my premise. So I wanted to set up a trade that gave me a no loss window all the way down to 230. So in this trade at expiration, I would have no loss even if FedEx was all the way down here at 230. Now, if FedEx did go below 230, as you'll see in that prior video, I was willing and had to be prepared to actually get FedEx assigned to me. In this case, I had to be willing to get 200 shares of FedEx assigned to me. But I had personally determined that at 230, I'm a buyer of FedEx, so I was okay with that. How does this all work? How do I get into this situation where I have essentially no risk at expiration, I need to point out, because prior to expiration, if this were to sell off, I definitely do have some risk. But so long as I have a conviction that I'm going to stick through this to the end, which is coming up here in June, I would have had essentially no risk all the way down to 230. So what happened with FedEx since then? Let me talk about how I put the trade on for zero risk to begin with. So the first thing I did is I came in here and I sold two $230 puts for $8.90 each, essentially taking in about $1,800, just a little under $1,800 in premium. I used that premium then to buy one long call at $1,780. That's essentially a wash here. That's how I did that. This is a ratio spread at this point. I'm selling two puts that are lower in value, and I'm using those proceeds to buy one call that's higher in value. Of course, this is a bullish trade. My premise is that the market is, in fact, going to go up. And if we take a look here at our chart from this point forward, let me just reel you to today. It did go up, and then today there's a massive gap up, almost to 290 on earnings. Now, I also want to point something out here. If I take a look at this earnings report, or not the earnings report, but if I take a look at the chart after earnings, that is all-time highs in FedEx. So, all-time highs in a stock, particularly a big gap up in earnings, to me, under normal circumstances, that screams sell a call, okay? And the reason it screams that is my premise is that, wow, after this big gap up, most companies will either chop sideways or they'll pull back a little bit into this range. So, how am I going to adjust this trade now, given this new information? Let me show you what my game plan is here. Actually, what I did on Friday in this trade is I came in and I sold a call, and I sold it in the June 21st expiration here, which is the same time that the rest of these expire. So I came in and I sold the 290 call, and I got $10.60 for that, was the price that I got for that. So now this is what my position looks like. But I even took this one step further. At this point, I didn't feel the need to keep this downside risk on here. So I came in here and I closed both of these. And today they're trading for 38 cents. I think I actually paid 40 cents for them because I did this just a touch earlier in the morning. So I'm going to buy to close those. So now this is my new trade. I no longer have any loss risk whatsoever in this trade. And if this thing expires in this general range, in the 280, 290 range, I will end up very nicely profitable in this trade. So come June, when these expire, June 21, I am expecting to probably end up with $2,000, $3,000 profit in a trade that I started back in December and again have no risk of loss in at this point. So that's the process of how I work through a trade like this. And now I'll probably just let this thing expire from here because my expectation is that FedEx will likely either just chop sideways up here or maybe it even goes higher. If this thing rips up to 315 or something like that, yeah, I gave up a little bit of upside here, but I sold that 290 call for over $1,000. So this thing would have to rip up above 300 in order for me to be better off. And I just don't see that happening here in the next 8 weeks or so. So that's where I am at in this trade at this point. If I were to want to get even more, maybe aggressive is the right term, I could even come in and sell another call spread. Maybe I sell a 300 and buy back a 330 or something like that, essentially turning this into a condor. That would be a way of juicing this trade further. I will wait and see how FedEx plays out next week, but I wouldn't rule that out as a possibility to add on to this trade. So let's just see how things play out next week, and maybe there will be yet another video on adding that call spread. So that's it for now, everyone. Take care.